All right, let's talk about the journey every single trader goes on. It's this wild ride from the total chaos of just guessing to the quiet control of a real professional. And this story isn't really about money or stocks. It's about your own mind. So let's get into it.
And this right here, this is where it all starts. Not with some grand strategy, not with a plan. Nope. It starts with a feeling. A raw, powerful gut feeling that you somehow can see what others don't. This one sentence just perfectly nails that core battle every new trader faces: emotion versus process.
So you do it. You open an account. The screen flickers to life, and all those numbers. It feels like you've just been handed the keys to a secret world where money is just a click away. It's intoxicating. You've seen the posts online, right? The screenshots, the promises, and now you think, it's my turn.
And there it is. Your first trade. It's based on nothing more than a hunch, maybe something you read on a forum at 2 a.m. You click buy. And for a little while, the market tells you you're a genius. That little green number starts ticking up, and every single doubt just vanishes. You feel brilliant. $180. Look, it's not going to buy you a new car, but wow, does it feel like a million. You made it in what, less than an hour? Doing basically nothing? You definitely take a screenshot of that. And this is the moment the hook sinks in. You're thinking, why isn't everyone doing this? I've totally cracked it.
And then the screen changes. That beautiful green starts to shrink. It disappears, and then it turns red. Your first instinct isn't to get out, it's to hope. You start telling yourself, oh, it'll bounce back. It always comes back. This is that internal voice of denial, that desperate hope that stops you from taking a small, manageable loss.
By the time you finally close it out, the genius from the morning is long gone. That little win has turned into a loss that's almost double the size. The excitement is replaced by this cold, heavy feeling in your stomach. You close the laptop, kind of hoping that'll make it go away, but it's real. And that is lesson number 1.
Okay, so after you lose, the reaction is pretty natural. You decide to get serious. The market wasn't the problem. You were. You just need more knowledge. And so begins the next phase of the journey. This desperate hunt for secrets that leads you straight into what I call the education trap. And man, this is where you go deep down the rabbit hole. You start binge-watching videos, learning all the jargon, buying the courses, joining the Discord groups. You're drawing all these lines on your charts, and you're convinced that the secret answer is just one more indicator, one more YouTube guru away. But after all that learning, you stumble upon a really harsh truth. That pattern everyone knows from that super popular video? Yeah, the market has already priced that in. You aren't getting into a clever trade, you're just becoming the exit for someone way smarter who got in way earlier.
Now this is the real turning point, and it's not some big dramatic movie scene. Honestly, it's just exhaustion. You're just tired. Tired of chasing secrets, tired of losing. And in that quiet moment of surrender, you finally stop looking for answers out there, and you start looking for them in your own actions. You start to build a process.
And this is the big aha moment. You start a trading journal, and the data doesn't lie. It stares back at you with the painful truth. You were cutting your winners short and letting your losers run for days and days, just hoping they'd turn around. You weren't really trading, you were gambling. And now you've got the proof. This is probably the single hardest psychological leap any trader has to make. You have to give up that incredible, addictive need to be right on this one trade. Instead, you learn to trust a process that has a slight edge over time. Think about it like a casino, right? The house doesn't win every hand of blackjack, but it knows it has a mathematical edge that guarantees it'll be profitable over thousands of hands. You start betting on your system, not your crystal ball.
So this becomes your new foundation. And let's be real, it's kind of boring. It's disciplined, it's systematic. You journal everything. You test your ideas on old data. You watch the market without clicking buttons, and you only, and I mean only, execute when your rules are met. That wild emotional gambling is replaced by a quiet, repeatable process. And with that process, your whole identity starts to shift. The gambler becomes a statistician. The dreamer becomes an operator. You realize the reality of consistent trading isn't glamorous. It's not exciting. It's defined by quiet, repeatable actions, day in and day out. So look at these results. These are not life-changing home run wins. They're small, consistent, green months. But they feel completely different because they weren't lucky. They were earned. They feel repeatable. You're not getting rich overnight. You're just learning how not to get poor. And it turns out, that's most of the battle.
This is such a powerful idea. There's no single click moment where suddenly everything makes sense. Real success is just the slow, quiet buildup of doing the right small thing over and over again. And then one day, you look up and realize the losing months are gone, your account is higher, and you're just different. But just when you think you've finally got the game figured out, you realize you've only been looking at one side of the chessboard. So now, we're going to pull back the curtain on the market's hidden architecture and the really sophisticated players who are moving the pieces.
It's such a simple question, isn't it? But it's one that almost no retail trader ever stops to ask. When you click buy, someone, somewhere, has to click sell. Who is that person? What do they know that you don't? Understanding this, well, this is the final level of the journey. See, the entity on the other side of your trade is often not another trader like you at all. It's a market maker. And their edge isn't about predicting which way the stock will go. Their edge is structural. They simply exist to buy from people who want to sell and sell to people who want to buy, and they make a tiny fraction of a penny on every single transaction, thousands of times a second. They are the plumbing of the market. So how do they get that structural edge? Well, through a completely legal and common practice called internalization. Basically, your order doesn't go straight to the stock exchange. First, it gets sent to one of these market makers. They get a tiny window, we're talking microseconds, to see your order, process it, and maybe even trade against it before it ever becomes public knowledge. It gives them a huge information advantage. So, what's the real cost of this setup? For just one firm, in a single year, the total cost to retail traders from this internalized order flow was over $90 million. And again, this isn't illegal, it's just the price you pay for playing a game when you don't fully understand the rules. And that brings us completely full circle. Right now, as you're listening to this, someone, somewhere, is opening their first trading account. They're starting this journey. They're armed with a little bit of cash and a whole lot of feeling. They think they found the secret to easy money. They are exactly where our story began. They're wrong, of course, but if they stick with it long enough, they'll learn. And it's going to cost them exactly what it costs everyone else to find out,